the big story of the day, which will play out in the stock markets and across private sector banking stocks today, and that's Yes Bank Era.
All right, so I think, just get the headline numbers out of the way first. You had a decent number in terms of net profit growth for Yes Bank, 25%. Most people have already spoken about that. Net interest income was up 33%. The non-interest income numbers were also strong. But I think what sort of took away from that headline strength was a second year of divergence. Before I get into the individual numbers, for those not familiar, this whole divergence ratio thing has come about after the RBI told banks that from here on, if there is more than a 15% difference between what we think your NPA level should be and what you think your NPA level should be, then you need to disclose it. Well, now for 2 financial years running, it has been disclosed by Yes Bank that there is a divergence in their assessment and the RBI's assessment, and it's a large divergence. So look first actually at the FY17 numbers. 6,355 crore was the divergence. The Yes Bank guys had said that they think NPAs are at 2018. The RBI at the end of FY17, that is as of March FY17, had pegged it at 8,374. So the divergence amount is more than 3 times what Yes Bank thought their NPA numbers was. That's not just a 15%, 20%, 25%. That's 3 times, and that's worth taking note of. This has happened for the second year running. So if you look at what they disclosed for FY16, the bank had disclosed NPAs of 749 crore only. The RBI assessed them at 4,926 crore. The resultant divergence is more than 5 times the reported NPAs. What does this divergence tell you? Well, it tells you a couple of things. NPAs are not a matter of opinion. So if a bank or a bank management is under-reporting, and they will dispute the word under-reporting till the cows come home, but that's what it is. It is under-reporting. It tells you that perhaps the bank is not as conservative as it should be. Perhaps the bank is not recognizing NPAs as early as it should. Sure, as the management explained, they have managed to recover a lot of this divergence. So yesterday, Rana Kapoor said that 47% of it had been upgraded. Some proportion of it had gone into NPA. Some proportion of it had been sold to ARCs. Some had actually been repaid to banks. So you have to take note of that and give them credit. But you have to ask the question equally, why was this divergence there in the first place? Important to note that they are not, of course, the only bank that have reported this divergence. The private sector bank space, and I'm focusing purely on private sector bank space right now, Axis Bank had reported a divergence of about 156% of the reported NPA in FY16. They reported a divergence in FY17, but a lower amount of about 26% of the reported NPAs. ICICI Bank reports today. We'll see what they show in terms of divergences for FY17, but they had about a 19% divergence in FY16. The question I think that leaves all of this open is that does this tell you something about governance standards in private sector banks, which actually, frankly, have no excuses to have weak governance?
A couple of quick questions I have, and that is, if you quickly tally the numbers that you pulled up on the screen, the divergence amounts to roughly 25,000 crores over these 3 banks. ICICI Bank's numbers are not yet reported for FY17 for over 2 years. So you're saying that these 3 banks underreported 25,000 crore rupees in bad loans, according to the RBI. Yeah, because
I'm not sure that's the right
10,000.
Yeah, I get the math, but I'm not sure that's the right way to look at it. Because there would be some overlaps between the accounts, perhaps. I'm not sure that that's the right way to look at it.
Second question is, if RBI in FY16 tells these banks that, hey, look, sorry, you thought this was not a bad loan, but I think this is a bad loan, wouldn't that have filtered into the way they look at an account for bad assets in FY17?
Absolutely.
Because if there was any difference in understanding, let's say the bank said, hey, I thought these parameters allowed for this to be classified as a standard asset, and RBI said, no, they don't. These are our doubts. They would take that interpretation into the next day's accounting, wouldn't they?
Absolutely.
So to have divergences over 2 years
is worrying. Is absolutely worrying. And I really, I think this question has been raised by various commentators. I really want to know what boards were doing. Were they questioning, this sort of underreporting or not? And will they at least question it from here on? Let's see.
Sorry, no, please, I have a few more, but I'm sure we have a lot of divergence conversation through the show. Go ahead.
No, just one query, Ira. We'll get to know from sell-side notes, because a bunch of these sell-side notes say that, hey, yes, there is this problem, but the top line growth was bullish. Now they have to adhere to the targets laid out earlier, and I can understand those compulsions. But would the future reporting of numbers by a bank like Yes or an Axis be questioned in the minds, if not on notes, or would you believe that now a large portion of the pain has started to get reported and the same scenario will not be repeated going ahead? Is there a way to figure that out?
But it just raises a trust question, right? It raises a trust question. In my mind, it does. I don't know how sell-side analysts look at it, but in my mind, it raises a trust question. Today the cycle is turned, and perhaps the stock of NPAs has been accounted for, but NPAs get generated in the normal course of business. If there's a trust deficit, how do you believe that the NPA numbers by any bank which has reported sharp divergences are to be trusted, next year, year after, year after? I just think it raises a trust deficit which should be addressed. Perhaps the management tried to address it by saying that we have managed to recover all of this. I still think that's not the point. The point is, why was it there in the first place?
No, and it is. The sell side, well, they are saying so, right? Deutsche Bank, divergence is discomforting.
Yes.
Let me run you through what all the Credit Suisse, large NPA divergence recurs.
Yes.
These are the headlines of their reports that were out last evening and this morning. Jeffries, Q2 FY18 review, Yes Bank, jarring quarter. I mean, there isn't anyone that, UBS also, regulator finds more NPL in FY17 audit. I thought the one that was most interesting, though, was Macquarie, which said trust deficit widens. That's the headline of their report, trust deficit widens. I have just one other last final question. Yes Bank says that, like you pointed out, almost 41% of the divergence has been recovered in cash, right? And then they go on to say that about 30% of the accounts have been upgraded to standard. This is in keeping with the statutory auditor's permission and the board of directors approval, but not necessarily RBI's approval. And then they've sold some to ARCs and some continue to remain as NPAs. If they've recovered 41% in cash, then maybe RBI was wrong to call them bad assets to begin with, because there is recovery.
Yeah, so you can recover after calling something an NPA. When you call something an NPA, doesn't mean you stop trying to recover it, right? You continue to try and upgrade it.
I get it.
So if something is substandard, you call it an NPA, and then as it upgrades, you upgrade it, which is fine. They are saying that you have not called it an NPA to begin with.
In the first place.
They should have called it an NPA technically at the end of March, and then as it recovered, they should have shown a recovery number. And I think the RBI, we have that quote plate from the Reserve Bank of India's statement, which came in earlier this week. And if we put it out, I think it's just worth pointing out what exactly they have said. In a rare sort of public rebuke of asset classification, they said that various rules of the Reserve Bank of India had been violated. And they say that in print.
So they said this when they penalized...
Yes, this is the statement. This came in on the 24th of October. They penalized Yes Bank for two things. But, on the asset classification thing, they said that the statutory inspection of the bank had revealed violations of various regulations issued by the RBI in assessment of non-performing assets. And then they go on to talk about the cybersecurity incident, which also they thought that Yes Bank had delayed in reporting.
Yeah, no, serious governance issues. I think, this trust deficit issue that Ira is talking about, and I think every investor needs to worry about what are boards doing in this process, right?
100%.
And I'm so sorry, but we can't absolve RBI of some responsibility in this if banks are not reporting the numbers. I mean, for instance, when would they have found out about the divergence?
So
or the fact that RBI is reading the bad loans differently from how they're reading
So they started doing this. So for the FY16 numbers were informed to banks just as the at the end of the year FY17 numbers were coming out. But that's because they had done the AQR, etc., and they had done an industry-wide review. So they informed them, I think, just when they put out that circular, which was in April, they informed them of divergences first in the FY16 year, which is why most of them disclosed it in their annual report. And then subsequently, they have informed them of divergences for the FY17 year, which is now getting reported. So they would have done that in the first half of this year, some point.
More transparency from RBI would also be a good thing to have, given the, this chronic situation that we're seeing.
No, but I reckon you'll also see this, if you're not seeing it already, I think you're seeing it already in the way the market is assigning valuation multiples to these banks. I mean, Yes has been growing almost at par with what some of the other larger peers have done, but the valuation is not at par with what the others are. That's probably for a reason.
Yeah, and I just have a slightly different point to make. Yes, of course, the valuations, will now start to adjust. I just want to make the point that when the FY16 divergences were released in annual reports, the public sector banks did not have very large divergences, not because they're great governance entities or anything like that, but because they started to clean up as soon as the AQR happened. And this is something that a rating agency, Moody's, pointed out in the case of Axis Bank in a note yesterday, saying that they have been laggards in cleaning up. I think a lot of these private banks have, said, we'll manage, we'll figure this out, we will, recover this money and hence not have to show poorer numbers. So a lot of them delayed, even post the AQR, the actual calling of bad loans is bad loans, assuming that they will be able to figure this out perhaps better. Maybe they have been able to figure out going by Yes Bank, but that they could have figured out after reporting those NPA numbers, right? Nothing prevents upgrades of NPAs in the normal course of banking business.